Gold is moving lower. We know it had a breakdown. It does favor further downside. I am still short with half my gold position in the short term. I still have my net long gold holdings, obviously, because I'm still bullish longer term. But like I always say, hey, listen, if in the short term the chart's telling me it's going to go down, am I just going to be an idiot and not step up and short it? Like I'll make some money on the downside and then I'll just go back on the bullish side. Sure. Let's look at silver real quick here, guys. Silver coming down as well. Again, not surprising. We saw the 2 inside bar consolidation. Again, here's your flagpole. This wasn't really a fully formed bear flag, but anytime you have a big drop and you go sideways without really rebounding sharply, it's obviously telling you something. And that was telling us, again, small downside. My first support, as I've said many days in a row now, is around 37.15, give or take. And again, that will be first support. Doesn't mean it's going to hold there and start to rally, but at least that's your first line in the sand.
Gold fell 1% Wednesday as strong U.S. economic data reinforced expectations that the Fed will hold rates steady. Gold prices rebound sharply. A break below the 50-day simple moving average suggests further downside as bullish positions unwind. Gold remains a hedge against geopolitical and financial shocks, but near-term momentum is bearish. Meanwhile, silver is steady around $38.20 after retreating from its highs. Despite consolidation, structural deficits persist. 2025 marks the 5th consecutive annual shortage. A Reuters poll predicts silver will triple its 2025 gains, reaching nearly $40 this year, with the potential to surpass $46 if macroeconomic trends shift. In the near term, traders will be watching both diplomatic developments in the Middle East and broader macroeconomic drivers, such as U.S. interest rate expectations and the strength of the dollar. Gareth Soloway, chief market strategist at verifiedinvesting.com, explains that the Federal Reserve kept the target range at 4.25% to 4.50% for the 5th consecutive meeting. Notably, 2 Trump-appointed governors, Michelle Bowman and Christopher Waller, voted to cut immediately. Traders continue to bet on a September rate cut, pricing in a probability of around 60 to 65%, with the CME FedWatch indicating a roughly 62% chance. Goldman Sachs has revised its forecast to expect the first cut in September, followed by additional easing in October and December. The Fed emphasized economic uncertainty tied to tariffs and labor market shifts, moving toward a wait-and-see messaging. Only limited internal support was evident for immediate cuts. Minutes from the June decision showed few officials advocating a July move, with most preferring to await clearer signals. Technically, the dollar is bouncing off its 50-day moving average, which appears to be acting as dynamic support. Chart patterns display a classic series of ascending highs and higher lows, reinforcing the current bullish momentum. On many trading platforms, RSI and MACD indicators also reflect strengthening technical conditions. Some broader technical signals, such as a recent death cross, suggest that this rebound may be part of a temporary move within a longer-term downtrend. As of July 29th, the benchmark 10-year Treasury yield stood at approximately 4.34%, down slightly from its mid-July highs of nearly 4.50%. Yields have broadly risen this week, reflecting upbeat economic data and diminished expectations of immediate Fed rate cuts, despite some market anticipation of a September easing. The U.S. Treasury also announced that it will boost debt buybacks, targeting longer duration notes and bonds, which will increase demand for 10 to 30-year maturities, pushing yields higher even as auction sizes remain steady. To ensure you never miss an update, don't forget to subscribe and hit the bell icon as we begin the video. We appreciate your feedback, so please leave a comment below and give us a thumbs up if you found the video interesting.
Obviously today, the GDP is taking a backseat. Why? Well, simply because we're waiting on the Federal Reserve. The Federal Reserve guys, again, reporting today their policy statement at 2 p.m. Eastern Time, followed by a press conference with Jerome Powell at 2:30. And remember, no interest rate change is expected. In fact, there's almost a 0% chance of any interest rate change. It's all about the guidance that they give and Jerome Powell gives in his press conference. Right now, the markets are pricing in a rate cut in September, which is the next meeting. The question is, will they deviate? Will they make the market realize that the economy is still doing pretty well? There's no reason to cut. or are they going to kind of bow to Trump essentially and cut rates and kind of go with that September cut? We will find out today. Chances are we'll be looking at that Fed watch tool tomorrow and deciding what the market is telling us at that point. All right. So again, S&P 500, we see again the lower trend lines. We're still hovering here. We have this bigger parallel channel going back to the low of October 2023 through the recent high right here. And that again is giving us a major wall of resistance right here with a nice sell-off yesterday of about 19 points on the S&P. Taking a look at the dollar is screaming higher. I did tell you guys yesterday, and I went over this quite acutely, is that for the first time yesterday, we made a higher high on the dollar in quite some time. So when you look at trends, right? Trends, you have a high or a high here or even a high here, right? High, lower high, lower high, lower high, lower high, lower high. And even here was lower than here, right? This is lower than the high there. Yesterday, we made a higher high. We talked about how that is a change in trend in the US dollar, right? Doesn't matter what I think or feel about the dollar eventually slowly going lower. I still think that's the case longer term. But in the near term, the bias has now gone to a stronger dollar. Now, you still will get pullbacks, but the interesting thing now is that if we confirm above this zone, this will then become support and a floor in the near term. Now, again, let's see where we close today on the U.S. dollar with the Federal Reserve giving their interest rate policy. The dollar will likely go wacky right around 2 to 2:30 p.m. So let's monitor that into the end of the day and see where we go. But either way, a higher high is now a slightly bullish signal on the U.S. dollar. The 10-year yield had a big fall yesterday. It is rebounding a little bit today. Today is a day where, again, interest rate policy may cause a major move up. Could we possibly go up here? Could we break this lower trend line on the 10-year? Obviously, you're looking at that rate decision or lack thereof and commentary as the key catalyst for the next big move in rates outside of that wedge pattern. STX is a chip company. STX, again, reporting earnings yesterday after the bell. Like so many chip companies, if you go to the daily chart, look at this daily run. All right. And again, I've kind of, hopefully made an impression on you guys to understand that when you have a vertical move of 147% with only minimal pullbacks along the way, that even if a company reports stellar numbers, the odds favor a pullback, a profit-taking setup. Now, it doesn't mean it's going back to the lows. It just means it needs a break. It needs a little pullback of consolidation, and that's what we're seeing today. The one thing I would just note is this pattern on STX is bearish. Notice how the vertical move was consistent here. And then you had kind of it pulls back from let's say fifth gear down to fourth gear. And notice how slowly it comes back to these highs. That's actually bearish. It's not really a bear flag because you made a higher high, but this is still a bearish setup. It tells you that the momentum was waning, and it also tells you there's distribution going on, which is why the vertical nature wasn't able to continue here, right? So again, if it was just as strong, you would have seen it continue up like this. In this case, it takes a leg lower, and then look at how it struggled to kind of go back and take out that high. So those are little nuances in charts that I pay attention to here. And again, interestingly enough, I did take a short into this on my own going into the Seagate earnings and made some nice money. I picked it up on the short side just a little bit before the close. And obviously the dip I took profits on. Just again, me just reading those charts. And this is obviously what I always hope leads to you guys saying, wow, there's real money to be made from me. Even though I'm not an institution, even though I'm not a millionaire or a zillionaire, I can still make significant money by looking at the charts and trading them in a short-term basis, right? Listen, if you buy and hold on the markets longer term, 20, 30, 40 years, you should do very well. That's one way to do it. I've found that I can make a lot more money by looking at the charts and letting them tell me on a shorter-term basis about where to buy and where to short, where to sell, where to cover, etc. All right. Couple other charts I want to go over today, guys. Garmin is one of my favorites for a short today. Again, Garmin, guys, a shorting opportunity. Now, this is gapping up a little bit on earnings. Yesterday, it closed at 239. It's trading at 243. You might say, wow, it's up on earnings. But remember, we've been seeing more and more how these stocks open higher after big runs and then they reverse. right? We even saw it with Boeing yesterday. In fact, if we look at Boeing, remember Boeing was up on earnings initially. And if we look at this, look at this. So I actually, in the game plan yesterday, and you guys can always go back and look, these are all there recorded for all of history to see. I talked about how Boeing was coming into major resistance and how stocks on good news are gapping up and then seeing a sell-off.
Gareth also mentions that NVIDIA has placed a substantial order for its export-compliant H20 chips destined for China. Investor optimism is growing as the U.S. appears close to approving export licenses, suggesting significant upside once deliveries begin, potentially as soon as the October or January quarters. Shares of NVIDIA Corporation were climbing toward a fresh record close on Tuesday after an analyst noted that reported momentum for the company's China chip business could increase investor confidence about NVIDIA's financial trajectory. Morgan Stanley upped its price target to $200 from $170, citing ongoing supply improvements and strong demand for Blackwell AI chips. The stock gained about 1 to 1.5% on this upgrade. NVIDIA CEO Jensen Huang sold roughly $39 million worth of shares between July 24th and 28th under his prearranged 10b5-1 plan. While significant, this is not viewed as a loss of confidence. It fits within a structured selling program in place for 2025. For the quarter ending April 2025, NVIDIA reported revenue of $44.1 billion, up 12% quarter-over-quarter, 69% year-over-year, with non-GAAP EPS of $0.81. The company anticipates sustaining high margins and improving supply for upcoming chip generations, such as Rubin and Feynman. On the other hand, Bitcoin has edged down slightly, trading in the range of approximately $117,800 to $118,300 as markets await clarity from both the Federal Reserve's policy statement and a detailed White House crypto regulatory report. This mild pullback reflects investor caution ahead of key macro signals, though activity remains within a consolidation pattern without sharp volume shifts. Glassnode analytics highlight a cost-basis support gap between $115,000 and $110,000, where minimal trading occurred during the recent rally, making that zone a likely magnet for potential correction. Conversely, if bullish momentum returns, perhaps triggered by dovish Fed commentary, Bitcoin could target resistance near $140,000, where speculative profit-taking thresholds are likely to be encountered. Now let's get back to the interview.
You have double top right here. The stock has gone up from a level of right here on April 7th. So we're up about 41%. And if you look at pre-market, we're really up about 43%. Look at the vertical nature. And again, my guess, and again, this is an educated guess on technical analysis, is that we'll open, maybe we'll push up to 246, 250, but ultimately I would expect a pullback to, let's say, 235, maybe as low as 230 on these earnings in the coming days. Wingstop, great move up. Look at this move on earnings, guys. I want to just shout out to a congratulations. If you're a member of Smart Money Stocks and ETFs, you got this in the small cap catalyst. And Drew, who runs the small caps, he's been crushing these plays. He picked this up just yesterday on the chart setup formation. In fact, I think this was his overnight hold trading setup that he saw. And this is, again, he has a course out there you guys can pick up for, it's pretty cheap. But again, you can find that on Verified Investing. But the idea here is that this setup just paid out in literally less than 24 hours. Congratulations again if you're part of Smart Money Stocks and ETFs. And don't forget, guys, Smart Money Stocks and ETFs, it's my service, but it's also other traders. They all included in there, small caps, ETF trader, the dividend trader. If you're kind of not someone who trades on an active basis, but you're like a dividend hardcore, let's just get those like good quality names. I don't want the excitement essentially of crazy moves. Just like pay me out that dividend and grind it out. Great service there, guys. Smart Money Stocks and ETFs at verifiedinvesting.com. All right, Humana trading up on earnings here, guys. By the way, there's no way I'm looking to short Wingstop, and that's why I didn't go over a level. It's a very small company, and again, I want to stay back on that. But Humana, good move up. The reason I'm highlighting this, there's no real trading levels yet, in all fairness, because it's been beaten down. So if we look at this, it's been beaten down like crazy. By the way, look at these former support levels that I had on the chart here. If we just reach this one over, look at what we just hit recently there. And that's a bottoming tail. If you're a technician of the charts, if you look in a textbook, you're going to find that as a reversal bullish signal. The stock, again, gapping up. But if you look here, right, I mean, it's not even close to shortable levels yet. It's been beaten down like so many of the insurers. UNH yesterday had earnings. That thing got crushed on earnings, another healthcare provider. And so, again, good job for Humana for kind of bucking the trend of a lot of these healthcare stocks out there. All right, a couple other things to go over here. Number one, AMD. AMD did not put in a topping tail yesterday, but it is into major resistance. I would be looking for a drop on AMD in the coming days. 1, 2, 3, 4, 5, 6. So that's a 6 count. It's getting close to a time count, something I teach in the Winning Trader series. And again, ultimately, again, lots of resistance here. I would expect a pullback. AMD has had an epic run. The valuation of AMD is now basically, from a PE standpoint, essentially where NVIDIA is. So they're essentially priced the same, even though obviously their stock prices are pretty similar as well at this point. Obviously, market caps are a mile apart at this point. Meta reports earnings, guys. Meta reports earnings after the bell. I'm going to go over Meta and Microsoft now because, again, those are going to be big players after the bell today. Take a look right here. Shoulder, hedge, shoulder. Now, it has not triggered, so in all fairness, you can't jump the gun here. All right, again, the trigger is if it breaks this line, but it is a bearish pattern, and it is coming off double top. So let's see what happens. We know Meta's been poaching a lot of great AI talent. That's great for them longer term, but the question is, how much money are they spending? And again, remember, Meta has a history of saying, hey, we're going to up our amount of CapEx, right, our spending to try to do better. And then the market has sometimes actually punished the stock because of that. And I just heard, again, they hired another top talent they poached another talent from Apple. At some point, by the way, they're doing this, by the way, from a lot of these big cap companies. I do wonder if there's ever going to be a backlash where these other companies start to purposely kind of say, you know what, you're going to do that from us, then we're not going to try to help you in any regard. Just kind of a thought on my own basis there. But again, if we break here, your estimated move to the downside, again, you can do a measured move here, classic TA of the measurement of a head and shoulder. A break point would bring us down to about 630, 635. That would be your short-term downside. On the offset, if on earnings it rallies and takes out the high of the head at 748, essentially, then it would negate the head and shoulders, and that would be off the table. There would be no more bearish pattern there. Microsoft, let's look at that real quick. Microsoft continues to hammer here. In all essence, this should fall on earnings. And the reason I say that is because, again, if you look at this trend line, and again, listen, it doesn't guarantee anything. I want to be clear on that, right? There's no guarantees in life. There's no guarantees in trading. But every time we've hit this line, we've had a pretty significant multi-month pullback. And so I would generally assume that we're into this level again. We would see a pullback here on the chart. So again, something just to kind of keep an eye on that front. I would be bearish going into earnings on Microsoft. Now, one that I'm bullish on is Qualcomm. Qualcomm, guys, take a look at this. So it's a chip company. Maybe it's not as sexy as AMD or NVIDIA, but it's still a chip company. And if we look at this, look at where the stock is trading. It is 43% off the all-time high from a year ago. So again, number one, it's not extended like Seagate Technologies is. In addition, look at this trend line here. There was a breakout. So see this trend line? All right, 1, 2, 3, and on the 4th, it broke out. It retraced, and now it's gone into this kind of consolidation phase on the charts. And so again, we look at this and we say, okay, right here down to here, it's been consolidating. I would generally be bullish going into earnings on Qualcomm, looking for a pop, although I do think upside's probably limited to about 176 to 177. But again, I like the chart. Again, remember on earnings, folks, and this is really important, earnings you can either be very right on or very wrong on, right? So again, Qualcomm, if it doesn't perform, this thing has downside to like 140. So, I mean, there is a lot of risk there to it, but I do like the setup here. And you guys know I'm not shy about putting myself out on the line because, again, I'm just relaying what the chart probabilities are. It's up to the chart probabilities to see if it actually happens or not. All right, into Bitcoin, let's flush out and see what else we have going on here. Bitcoin has continued to to hover in this. Again, amazing to see how long Bitcoin's been chopping inside of this sideways pattern. Remember, the only reason this is not bullish consolidation is because of the bearish reversal topping tail. The most recent signal, basically the most recent signal takes precedence. So again, if you negate the topping tail with a close over, let's say 123,300, now that becomes absolutely hugely bullish. But as long as this bearish signal is here and that move is off of that, it slightly favors the downside on the charts. And these are nuances that, again, I love revealing to you guys because I truly think it's going to make a difference in your lives in terms of understanding and putting yourself on the side of the higher probable trade. And by the way, that's what these institutions do. They literally have people out there they pay millions of dollars per year to as salaries to give them this same information. I love the fact that I can do a lot of this to you guys or give you guys this information. Now, listen, they all have more money than I do or than any of us do. They have trillions, if not, billions of dollars under management. But it doesn't mean we can't at least make returns equal to what they're doing. And I think that's the important thing. Everyone looks at these institutions and is like, oh my gosh, they're the big, I could never perform like the. Actually, you can. Actually, you can. It just takes a little work. But listen, if I can do it, anyone can do it. I'm firmly in belief of that.
Markets remain highly susceptible to shifting macroeconomic signals, including Treasury yields and Federal Reserve policy, as well as global demand patterns for technology and precious metals. While Nvidia continues to lead the AI-driven equity rally and Bitcoin consolidates near critical support levels amid regulatory uncertainty, gold and silver face technical challenges despite long-term bullish fundamentals. Traders should keep an eye out for potential catalysts that could cause abrupt changes in asset classes, such as Federal Reserve remarks, geopolitical events, or tech company earnings. Could a rate decrease by the Fed in September spark a simultaneous resurgence of bullish sentiment in gold, silver, and Bitcoin? Will any general market downturn in Q4 earnings be mitigated by Nvidia's export advancements and robust demand for AI chips? We would be delighted to hear your opinions. Please leave them in the comments section below. If you found this video helpful, please give it a thumbs up and remember to subscribe for future videos. Thank you for joining us on this adventure.